Welcome to Financial News Daily, your trusted source for the latest global financial updates. Today is Monday, June 1st, 2026. And this is our brand new weekly format, designed specifically for personal investors like you. Every Monday morning, before the markets fully open, we compare this Monday to last Monday. We show you exactly who made money this week, who lost money, what changed, and what should you be watching in the week ahead. No complicated jargon, no endless theory, just real numbers, real changes, real impact on your wallet. Let's start the clock. Let me give you the complete scoreboard, comparing Monday, May 26th to today, Monday, June 1st, 2026. Gold. Last Monday, $4,521 per ounce. This Monday, $4,593 per ounce. Change, up $72, plus 1.59%. Crude oil, WTI. Last Monday, approximately $106 per barrel. This Monday, $89.69 per barrel. Change, down over 15% in 1 month. This week alone, up 2.67% on ceasefire hopes. S&P 500. Last Monday, approximately 7,560 points. This Monday, 7,580 points. Change, up 0.22%. On track for another record high. Dow Jones. This Monday, 51,032 points. Up 0.72% on the day. Bitcoin. Last Monday, approximately $74,000. This Monday, $73,525. Change, down 0.55%. Slight pullback. US dollar index, DXY. Trading at 98.94. Essentially flat week on week. Brent crude oil. $91.12 per barrel. Down 1.7% today. On renewed Iran ceasefire optimism. Summary. Gold up. Stocks up. Oil down sharply. Dollar stable. Bitcoin slightly lower. Now, let me tell you what this means for every specific asset class you may hold. Let's start with gold, because this is the question most of you are asking. If you bought gold last Monday morning, May 26th, at $4,521 per ounce. Today, Monday, June 1st, gold is trading at $4,593. You are up $72 per ounce. That is a gain of 1.59% in just 7 days. To put that in real money, if you invested $10,000 last Monday, your investment is now worth $10,159. You made $159 in 1 week, doing nothing. If you invested $50,000 last Monday, you are now up $795. If you invested $100,000, you gained $1,590 in 7 days. Now, what drove this recovery? Remember, on Wednesday, May 28th, gold hit its lowest point in 2 months, at $4,380 per ounce. If you had panic sold on Wednesday, you would have locked in a loss of $141 per ounce from Monday. But investors who held through the volatility are now sitting on a gain. This is one of the most important lessons in personal investment psychology. Short-term volatility is noise. Fundamentals determine direction. The fundamentals for gold remain intact. U.S.-Iran ceasefire negotiations ongoing. Inflation still at 3.8%. Central banks still buying gold worldwide. J.P. Morgan still targets $6,000 by year-end. The technical floor has been confirmed at $4,380 per ounce. And analysts now see the next target at $4,576 to $4,645. Verdict on gold this week. Buyers from last Monday are in profit. The week rewarded patience. Now, the stock market. The S&P 500 opened this Monday near all-time record highs at 7,580 points. If you held the 5 defensive stocks we recommended last week, J&J, PG, KO, WMT, and LMT, here is what happened to each. Johnson & Johnson, Johnson & Johnson held steady. Pharmaceutical demand does not fluctuate with weekly geopolitical noise. Dividend payers like Johnson & Johnson showed lower volatility than the broader market. Procter & Gamble, PG. Consumer staples held firm. When markets are nervous, money rotates into defensive stocks. PG benefited from this flight to quality. Coca-Cola, KO. KO demonstrated its classic defensive behavior. Flat to slightly positive for the week. Consistent. Predictable. Boring. Exactly what you want in volatility. Walmart. As oil prices fell this week, consumer spending expectations improved slightly. Walmart held near recent highs. Lockheed Martin, LMT. This is the most interesting story this week. The U.S.-Iran ceasefire talks actually created short-term selling pressure on defense stocks. Why? Because a peace deal theoretically means reduced near-term defense spending. However, analysts at Seeking Alpha noted that Lockheed Martin's $160 billion backlog provides years of contracted revenue that a ceasefire cannot cancel. The dip, if it occurs, is likely a buying opportunity, not a fundamental change in the story. The key macro story driving stocks this week. Charles Schwab confirmed major indexes are on track for another positive week, forging record highs, fueled by robust corporate earnings growth. Dell Technologies surged over 30% after strong quarterly results. Further evidence that AI infrastructure spending continues at an extraordinary pace. The message for stock investors: your defensive dividend portfolio performed exactly as designed. Low volatility, steady income, no dramatic losses during the midweek. Gold and oil sell-off. Now, the biggest mover of the week. Crude oil. This is the one number that touches everything in your financial life, whether you invest in oil or not. Here is the weekly oil story. 1 month ago, oil hit $115 per barrel when the Iran conflict escalated. Last Monday, oil was still elevated, near $106. Today, WTI crude is at $89.69 per barrel. That is a 15.7% drop in 1 month. What caused this week's decline? The US and Iran reached a preliminary agreement to extend a ceasefire and potentially ease restrictions on shipping through the Strait of Hormuz. Brent crude fell 1.7% on Monday alone, heading for its biggest weekly drop in 2 months, as markets priced in an eventual reopening of the strait. Why does oil price matter to you, even if you don't own oil stocks? Because lower oil means lower inflation, lower transportation costs, lower grocery bills, higher likelihood the Fed cuts interest rates, better conditions for real estate, higher consumer spending power. And for your investment portfolio, lower oil is good for consumer stocks. Walmart, Coca-Cola, and Procter & Gamble all benefit when energy costs fall. Lower oil also reduces the urgency for safe haven gold buying, which partially explains why gold dipped to 4,380 midweek before recovering. Watch this number every Monday. Oil is the single most important macro indicator for personal finance in the current environment. Now, let me bring this home with a personal finance scenario. Imagine you had $20,000 to invest last Monday, May 26th, and you followed our recommended allocation. 35% gold, $7,000. 40% stocks, $8,000. 15% short-term bonds, $3,000. 10% cash, $2,000. Here is what happened to each position. By this Monday, June 1st, your gold position, $7,000 invested. Gold moved from 4,521 to 4,593. Up 1.59%. Your $7,000 is now worth $7,111. You made $111 in 1 week. Your stock position, $8,000 invested. S&P 500 up approximately 0.22%. Defensive dividend stocks roughly flat to slightly positive. Your $8,000 is now worth approximately $8,018. Small gain but, critically, no losses. Your bond position, $3,000 invested. Short-term treasury bonds held steady, earning approximately 3.75% annualized. That is $2.16 this week. Small but guaranteed and risk-free. Your cash, $2,000. Untouched. Ready for opportunity. As we discussed, oil fell sharply this week. If energy stocks dip further, your cash reserve allows you to buy that dip. Total portfolio started at $20,000. Today worth approximately $20,131. Total gain, $131 in 7 days. That is a weekly return of 0.65%. Annualized, that pace would equal approximately 33% per year. Now, is every week this smooth? Absolutely not. Some weeks, gold falls and stocks rise. Some weeks, everything falls together. But the point of diversification is that no single bad week destroys your portfolio. You survive the bad weeks. You participate in the good weeks. And over time, you build wealth. Before I close, here are the 5 things to watch this week that will shape next Monday's scoreboard. Number 1, Iran ceasefire update. Will President Trump approve the preliminary deal? A confirmed ceasefire could push oil below $85 and gold toward 4,400. A breakdown in talks could reverse everything. Number 2, U.S. jobs report. Released this Friday. If jobs are strong, the Fed stays on hold. If jobs disappoint, rate cut expectations return, which is positive for stocks and gold. Number 3, Federal Reserve speakers. Multiple Fed officials speak this week. Any hint of rate cuts could send gold and stocks higher. Any hint of rate hikes would pressure both. Number 4, technology earnings. Following Dell's 30% surge last week, more AI-related earnings reports arrive. Strong tech earnings support the S&P 500 record high run. Number 5, oil market settlement. Watch whether Brent crude breaks below $90 per barrel. If it does, inflation expectations fall. If it bounces back above 95, Iran deal talks may have stalled. Set your alerts. Check back here next Monday. We will tell you exactly what happened and what it means for you. That is your complete Monday market check for June 1st, 2026. The scoreboard this week. Gold buyers from last Monday, in profit. Stockholders, small gains, protected capital. Oil watchers, big moves, important signals. Cash holders, ready for opportunity. Come back every Monday morning for your weekly financial scoreboard. Because in investing, what happened last week determines what you do this week. And one final, important reminder. All information in this video is for reference purposes only. This is not financial advice. This is not a recommendation to buy or sell any asset. All data is based on publicly available market information as of June 1st, 2026. Please consult a qualified financial advisor before making any investment decisions. If this weekly format helped you see your finances more clearly, give us a like and hit follow so you get this every Monday morning. Your financial future matters. Stay informed. Stay ahead. See you next Monday, right here on Financial News Daily.